Good afternoon. Welcome to Mid-Cap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Markets have come up from the record highs that we've seen. But this is something that was expected after the stellar run that we saw yesterday. October series did not start with a bang after a stellar rally that we saw in the September series. But yes, this is something which was par for the course.
That's right. So cooling off, after starting off quite strongly, in line with the kind of cues that we got from Asian markets and from the gift Nifty as well. But today, we've seen a little bit of tempering off, especially in the broader markets. It's been the second day running that we're actually seeing quite a bit of a sell-off over there. But quite a lot lined up on the show. Let's start off with the top headlines. Market fall to the day's low after holding firm in the first half of trade. Mid-cap index slips below 60,500. Nifty Bank falls over 400 points.
Westlife Food fires up in trade today as Goldman Sachs improves the rating to a buy. Goldman Sachs expects same-store sales growth to start recovering in the second half of FY25.
Sequent Scientific surges more than 13% on the back of the fact that the company has announced a merger with Vishal Life Sciences. The merger is expected to be EBITDA margin accretive and also help deleverage Sequent's balance sheet.
Newland Lab surges in trade as US FDA approves Bristol Myers Squibb's schizophrenic drug. Okay, all right. For the Nifty, it's a 30-point cut that we are looking at right now. Bank Nifty is the one which is putting a lot of pressure today. We do have a 500-point, almost a 500-point cut on Bank Nifty. Metal Index, IT, some of these names which were contributing to the gains today, they have also tapered off. And yes, they are, of course, in the green right now. But this pressure mostly is coming in from Bank Nifty. We have the mid-caps which were outperforming today. And this is coming after a lot of weakness that we've seen over days. But it has come off from the highs as well. The small cap index absolutely flat. So it looks like there is some profit taking across the board, but metals and IT, they continue to be in the green.
Absolutely right. Actually, the sell-off has intensified in the last half hour. At 1 p.m., we've actually seen quite a bit of intensified sell-off. Remember, we closed the September series on a very strong note. Today morning, we started the October series well, but after that, in the second half of the trading session today, just before the weekend begins, we're seeing a little bit of profit booking emerge. But moving on to an exclusive story, sources say IPO-bound Waaree Energy's listed arm, Waaree Renewable Tech, eyes Enel India's business. Rachna is here with more details.
Right. Sources have told CNBC-TV18 that Waaree Energies, which is an IPO-bound company now, which has a listed arm called Waaree Renewable Tech, is now looking to acquire stake in Enel India. Enel, the Italian company, has their India subsidiary in Enel Green Power India, has been looking to sell their India business for over a year now. And now, as the race moves forward, Enel has emerged as one of those names. Now, speaking of Enel Green Power India, it has operational assets of about 760 megawatt peak with a split of solar as well as wind. So this could give Waaree a leg up if this transaction gets through, if it emerges as the winner in this bid. We did write to Waaree Renewable Tech, but we haven't received a response yet. In this race, another notable name is JSW Energy.
Okay, all right. Thank you so much for joining us, Rachna, with those exclusive details. With that, we'll do one thing. We'll slip into a short break. We'll get you more on the markets and connect with Ramani Dati, who's the CFO and Team Lead Services, to put spotlight on hiring trends in the IT sector and a lot more. Welcome back. You're still tuned into Mid-Cap Radar. It's time to put spotlight on IT hiring trends and hiring trends in other sectors as well. Team Leads in a recent report says hiring in India's IT sector is set to post faster YOY growth in the next 6 months, adds that the first half numbers indicate a robust recovery in IT hiring. To understand this and more, Ramani Dati, the CFO at Team Lead Services, is joining in now, and we'll try and understand some aspects about the business as well. Ramani, good afternoon. Thank you so much for joining in. Well, first up on what's happening in the IT space, we did get the guidance upgrade coming in from Accenture as well today. So that has actually made the IT space really happy. What are the hiring trends suggesting now? How was it in the first half, and what is the outlook going forward?
Sure. Almost after 5 quarters in a row, this is the first quarter where we have seen at least there is no further drop in the headcount as far as IT services is concerned. Because we are seeing minimal low single digit growth in GCC side, but IT services consistently for last 5 to 6 quarters, they are dropping numbers, especially on the contract staffing side and overall IT employment numbers also. And Q2 is the first quarter, as I mentioned, in a long series of 5, 6 quarters, we have seen that the net drop in headcount has finally been frozen. And we are expecting H2 to post at least 8 to 8.5% year-on-year growth compared to H2 of last year. And the skills where we are seeing the maximum demand coming in IT services segment is cybersecurity, cloud, DevOps, project management, AI, ML related. And we expect a much positive momentum going into next year in terms of hiring requirements and overall demand.
Good afternoon, Ramani. Ramani, while you call out saying that there could be close to 8% growth as far as H2 is concerned, one thing that we also have to keep in mind is the fact that it comes off a very low base, right? A base of degrowth. So are we now expecting IT hiring trends to come back to the normalized range, or is it still weak compared to historical averages?
No, definitely it's still weak, because even though we are saying 8.5%, as you rightly pointed out, the base is very low. Like even in our own case, we lost almost 30% of our headcount since we are into contract staffing over the last 6 quarters. And on a lower base, this number may not be very high. But the fact that finally we are seeing a positive momentum and pickup in the hiring trend is a good outcome. And especially for the next financial year, we are very positive that we should get back to a growth rate of 20 and upwards of 20% for FY26.
Okay, so growth rate of 20% in IT hiring from FY26. Ramani, any particular reason why we are seeing this? Is it improved demand? Is it higher spending that has come by? And where are we seeing this higher spending come by? And from which space? Is it the BFSI? Is it other sectors?
No, it's not just one or two sectors that are driving this kind of demand, because for a long time, many IT services companies have kept hiring on freeze, and many of those have already hit the optimal levels in terms of their employee productivity and optimization. And they have been consistently winning new deals as well. And now that they have already reached the peak utilization, the hirings have started. And BFSI may be one of the initiator, but we are seeing demand coming across all the sectors as well.
Just moving to your financials, when we talk about Q1, there was quite a big hit as far as the EBITDA margins was concerned. Of course, you attributed to quite a lot of one-off factors like seasonality, delayed university billing as far as the edtech business is concerned. Q2 onwards, can we expect EBITDA margins to bounce back significantly?
So sequentially, for the next 3 quarters, we are very confident on posting a 20% growth QOQ. And this is on absolute profits, not specifically on a margin percentage. Because for us, the margin percentage is dependent on various factors in terms of like which industries are hiring more, where are the average salaries higher or lower in which locations. So going by absolute profit number as a rupee value, we are confident of maintaining a 20% sequential growth for next 3 quarters in this financial year.
Okay. I wanted to understand the sectors which are doing well for you now. The last time we had spoken, you had indicated large NBFCs are still under pressure, but FMCG is seeing a comeback in terms of demand. With the festive season coming in, and we do have rural recovery also come by, what kind of growth rates would you be looking at in these two particular sectors?
Yeah. So given the festive season ahead, we are expecting a close to 20% year-on-year growth in FMCG, FMCD, e-commerce and retail segments. These 4 segments ideally for this quarter would give us the maximum contribution to the overall growth. BFSI continue to be softer because in the past, even BFSI used to give us upwards of 20-25% volume growth, but that has come down to single-digit growth number now. We are expecting recovery maybe after a quarter. We have to see. As of now, we are still, as far as BFSI is concerned, we are still in single-digit growth rate. And we are also seeing good pickup in manufacturing, pharma, telecom, and other industry verticals as well, maintaining close to 20% year-on-year growth.
Ramni, in the Q1 call, you highlighted a couple of things. Number one, you did mention that as far as the general staffing segment is concerned, you're seeing significant tailwinds. How do you see that playing out? And could you give us some numbers in terms of how do you see that particular vertical actually growing on a year-on-year basis or even sequentially? And also last time we did, get you on the channel to speak about the budgetary allocation as well as some fillip given to this sector. So has there been any on-ground improvement from those initiatives?
Yeah. No, firstly, with the internal initiatives that we have taken, the volume growth has improved from a 14% CAGR to close to 20% CAGR now. And this 20% headcount growth we have been consistently maintaining for the last 4 quarters, and we are confident of maintaining that number into future as well. As of now, we haven't fully assessed what would be the impact of any regulatory changes or the government initiatives and budget allocations at this point in time. If those notifications fully come into picture and give us more tailwinds, so the acceleration can go upwards of 20% year-on-year growth.
Okay. And how is EdTech going to contribute from here on? You did indicate margin improvement to come by because of that as well. You have spoken about expecting a steep increase in EdTech profit. How much is it contributing right now? What kind of steep profits that you're talking about here?
Yeah. For us, EdTech business roughly gives about 100 crore in top line, but that's one of our higher margin businesses, giving almost 6 to 8% EBITDA margin. And this year, we are expecting a slight improvement in their margin percentage as well as absolute profit contribution to the bottom line. However, this year, because of UGC guidelines to all universities asking them to realign their curriculum to the new education policy, the billings got delayed, which are supposed to happen in Q1, Q2, got deferred to Q2, Q4. So almost 100% of the profit for our EdTech business will be booked in the second half of the year, but we'll be maintaining at least a 40 to 50% growth in absolute profits of our EdTech business on a year-on-year basis.
Ramni, one thing that the street has been eagerly waiting for is inorganic expansion. We do understand that as far as the HR vertical is concerned, HR tech vertical, you were scouting for possible acquisitions. Any progress on that front? Any possible targets in mind? And what will be the size of these acquisitions and how will you fund it?
Yeah. No, for us, our acquisition strategy is very clear. So we only focus on India businesses. We don't have any plans of expanding outside of India. And we are focused more on the organic growth. Any M&A discussions that we are doing are to give us some capabilities, some entry into a new areas or new modules that we are so far not entered into, or maybe to accelerate the scale. And because of that, the size of the acquisitions, the ticket size would also be typically under 100 crore. Because in the businesses that we are operating in most of the businesses, we are among the top players. So there is no requirement for making any large deals. And we want to focus on organic investments more rather than inorganic. Having said that, in HR services, we are in active discussions with a couple of M&A deals, and these are specifically aligning to our HR tech solutions, which can be cross-sold to our staffing clients, as well as building it as a separate standalone business entity as well.
Okay. All right, Ramni. Thank you so much for joining in with those insights. The street seems to like what you're saying. The stock is at the day's high. So some recovery after some lull that we have seen in the IT space, and the other sectors also doing well for TeamLease. We'll do one thing. We'll slip into a short break. Up next, Ashish Mudhani of ICRA will decode opportunities for EPC players in the Interlinking River project. Interesting discussion lined up next.
Welcome back to Midcap Radar. Markets continue to remain sluggish, especially in the last half hour of the trading session. But moving on, an ICRA report suggests that business opportunities worth 2 lakh crore are expected to open up for EPC players over the next decade for the completion of 4 priority interlinking river projects. To discuss this and more, we have Ashish Mudani, Senior Vice President and Co-Group Head Corporate Ratings at ICRA. Good afternoon, Ashish. Thank you so much for joining us. First up, give us the context in terms of how exactly do you see these opportunities panning out? Also, a sense of the timelines as to when exactly do you see these projects come up for bidding, and what is the kind of opportunity that EPC players have?
Hi, good afternoon. So if you look at the overall scheme of things in the river linking project, I think interesting times ahead for the infrastructure sector. The government's focus on the water sector has increased significantly in the last 6 years, which is also reflected in stellar 69% CAGR growth in the budgetary allocation to Jal Shakti Ministry. Now, if you look at the National Water Development Agency, which has identified 30 river linking projects, which is really funded by a mix of Government of India's funding and also balanced by the state government. These 30 river linking projects will be connecting 16 peninsular river links and 14 Himalayan river links. And of these 30 projects, 4 projects have been identified as the priority ring projects. At ICRA, we recently did a study the kind of business opportunities to provide for the construction entities. And what we realized that the business opportunity, more than 2 lakh crore are expected to open up for the construction entities for the next 10 to 15 years. And it's just start. We're going to see a massive order awarding activity to see in this particular space. Especially if you talk about the 4 priority links projects, the business opportunity itself is 2 lakh crore, of which almost 80,000 crores of projects are expected to be awarded in the next 4 years. So we are expected to see a gradual ramp up. And again, once the other projects also gets to the final DPR studies are done and they get into the awarding process, the overall size as of now itself is more than 20 lakh crore. So this, but again, this will be spread over multiple years. There are challenges pertaining to the coordination between various states who has to agree on the water sharing arrangement. But having said that, the kind of opportunity that will come up for the sector is huge in the next 10 years.
Okay. So, Ashish, I try to understand the breakup of these spends as well. And additionally, what are the companies or the EPC companies that have the capabilities to execute this kind of a project? Something like Dredging Corporation, would that also be involved? Because you say it's a huge opportunity, almost 2 lakh crore rupees. So what kind of sectors would be involved here?
So, Sonal, here, primarily the entities present in the irrigation space are the major beneficiaries. As a policy, I won't be able to comment on the company-specific commentary, but almost everybody who is there in the water, in the hydro space, in the construction, who has worked on the dam construction, even people who are benefiting in the recent time on the drinking water segment under Jal Jeevan Mission, those entities, because ultimately you have to work on the canals. So entities present in the canals, in the dams, in the barrages, all of them will benefit out of it. And not only on the construction side, even because this is such a massive project, you will see a lot of demands coming for the equipment supplier also, who will catering like the backhoe loaders and the excavators also here.
Ashish, give us a sense of the timeline. You said that very soon you could see close to 80,000 crore worth of interlinking projects that could come up for bidding. So give us a sense of which is the agency that will be conducting the bidding, which are the key projects, at least the first 2 or 3 projects that could come up for bidding. And when you talk about competitive intensity, is there significant competitive intensity that is seen among EPC players to get a piece of this pie?
So, let me answer it one by one. So if you talk about the implementation agency will be the National Water Development Agency who will be doing it. And interestingly, while I'm talking about the 4 projects, one of the projects has already been awarded. One of the segment of that project is Betwa. If you search on it, it's one of the project segment has already been awarded to a large listed entity in the recent time. If you talk about the top 4 projects, we are talking about the Godavari Kaveri project, which is the largest of the 4. And then we are talking about the Betwa, Kosi Make, and the Parvati Kalisindh. So all these are the 4 top projects which will get awarded in the next 4 to 5 years. but the initial traction has already been there. Now, what we are seeing is, if you look at the budgetary outlay, it is just 5% right now towards the interlinking, right? But again, this once the project get awarded, we will see a huge uptick in this budgetary allocation for this particular segment in the next 2 to 3 years itself.
Okay, all right, we get that point. We would have loved to chat a lot more, but completely out of time, Ashish. Thank you so much for joining in with those interesting updates and what's happening with the infrastructure space. For the markets, let's quickly take a look before we wrap on the show. The mid caps, that index is up 70 points right now. We do have the Nifty, which has come back into the green as well. So 13 points higher on the Nifty. But yes, it is still off the highs of the day. So mid caps have recovered, Nifty has recovered. And a lot of it, if we talk about the stocks which are leading to these gains right now, we have something like a BPCL, which is surged. It's up around 7% right now. We do have Reliance Industries, which has pushed the Nifty higher right now. So Reliance Industries is the reason why you've seen that big move on Nifty. It is at the day's high right now. We have stocks like Bajaj Auto. There is also Maruti Suzuki. Some of these consumption names are also leading to the gains that we are seeing right now. So watch out for this one. We'll maybe see interesting moves again on the markets in last 1 hour of trade. But for now, we'll take your leave on this edition of Midcap Radar. Your stocks when we return.